About 2 weeks before Christmas. My goodness gracious. Don't know how that happens. Time just seems to fly, especially when getting old. It seems to be just a little bit quicker. Okay, let's dive in, shall we, and see what is on offer for this Monday and indeed for the week ahead. We will start not with the Aussie 200, but with gold, which is coming off that high that was reached and breached last week in quite a tumultuous affair. There it is there. Monday morning, Monday evening. Wow, what a move, eh? And nothing has been positive for gold really since, and that continues its decline. At the moment, off the big high, as I say. Hang on 2 secs, and I'll get my correct boxes up. There we go. I can see what's going on, and also see what's going on YouTube. Righto, so are we going to trade a breakout today is the question. Well, looks to be breaking out as we speak, right? The range is pretty tight, but so is the pivot situation. So there's our start of Asia session, and here's our current bar. So that is the range, or the nominal range that we attempt to break and look for profit. Yeah, I don't want to get into a long, that's for sure. And yeah, I don't think the short's too bad, frankly. We have a look a bit wider than that. No, it's not great. That's the entry there. You're entering straight at support, and yeah, there's a bit of weak support there at DS1 as well. No. It's just not a trade for me. I think the risk is far too high for the reward, which I'm not prepared to take. So on that basis, we will move on. If I were to trade gold this week, well, I'm a bear gold, but I can see that this break of that big double top, which is actually a triple top on the monthly chart, man, it looks toppy there, doesn't it? Just amazing that we broke through in a very, very, very brief spurt last Monday, as I said. But since then, prices come off and continue to come off. Very, very volatile situation. And I wouldn't be prepared to trade this at the moment, frankly, until I saw probably price come down to maybe this level again. It's certainly got some support to get through on the way, granted. If it were to come down to that level again, I think I'd be a buyer. But we're around about what 1935.40 down here. I think I'd be a buyer down here, but not till then. I don't think. I think everything that that I would be looking for would be reversal bars to the downside, and I'd be willing to trade down, as I say, to about that level, and then I'd look to buy it up. So that's gold. Let me update a couple of things. But well, actually, none of you guys, unless you're subscribers to the Telegram group or my Telegram group. And I noticed Gary's in, so Gary, I'll just update that from last week. We attempted to trade Euro Aussie long as a false break of not just this trade line, but also this horizontal level through here where we'd broken down. The ABC failed, ABC being ABC, failed to materialize, certainly at that point. And we got back above both that horizontal level and the trade line, then retested it with this bar here, which is where we placed an order long. And we got absolutely pummeled. No idea what happened there in terms of whether that was a fundamental move or not. But the market said no at that point and drove us straight back down. I'm very near to replacing that order, very near to doing that, because I still think I've got the directional bias correct. If I have a look at the weekly chart, I'm kind of seeing this sort of thing. I don't have a great base to start with, to be fair, but that level there is probably reasonable. And if I'm in that zone, then I'm still thinking we're going back to here at some stage on Euro versus the Aussie. And that's why I'm very, very close to replacing that order. I haven't done so, but what I have done is replace an order I took on Kiwi Swissy, which did exactly the same thing. Now, this was a reasonably, in fact, this was a good setup. Really like this as a sell last week, where same thing applies. We broke above the resistance trade line, but more importantly, rejected this strong horizontal level around about the 54-cent mark and just came straight off that big time. Long tails, long tails, long tails, long tails. Didn't want to know about anything above that weekly pivot. And it's there that I felt we would get a nice follow through of this bar here. But we didn't. It was a lovely false break of both the trade line and the monthly pivot. Didn't get that. Instead, we got absolutely pummeled again, exactly the same net day that we had both the Kiwi Swiss and the Euro Aussie trades in, and we got both of them absolutely smashed. I have replaced that order, pretty much exactly the same, I think. I think I had my stop loss up here. So if you wanted to follow that, the entry is at 0.5351. Got a stop loss 64 pips above that, which is at 0.5415. And my first take profit is at 0.5315. So that's just replacing that very same order from last week. Nothing's really changed, and that's why I think, well, apart from that horrendous candle that took us out. Of course, there was good news, and that was delivered on CAD Yen. Now, CAD Yen was turned out to be a super trade. We traded this bar here short as this is for those of you who don't follow the slingshot, which is my main system or strategy. We had a great trade line here and lots of warnings that this was going to go short. And we just managed to pick up the final slingshot candle pattern here and managed to get in the market at that level. Now, when I woke up on Friday morning, I saw price down here at these levels, and I immediately closed the trade, knowing, of course, that I'd got hammered on the other two trades. So I managed to get a net result positive, but wow, it took a really nice trade on CAD Yen to get me to that point. Since then, a great exit as it turned out. CAD Yen has come straight back to that level, and I don't want to know about that anymore this week. In terms of what's ahead and what I'm looking at for the week, there are a few game changer bars, and I'll have a look at those for you. Let me go to, I think we're there. No, we're there. Oh, there's another order, by the way. Pound Swissy, which I have been trying to get hold of for quite some time. And I think we've placed probably 3 or even 4 orders on this as buys. Not one of them has triggered. I think there was one there. I think there was one there. And maybe even one back here. I'm not sure, can't quite remember. But the same applies. And I've said this time and time again. This amazing rejection bar, very, very similar to what we saw in gold last week. This amazing reversal bar, which was backed up by a bullish engulfing bar, certainly engulfing the body of that candle. That was back in, was it October or November of last year? October of last year. We're now, 13 months on from that, nearly. 13 a bit, nearly 14 months on from that. Yet every single bit of price action, bar this candle here, which broke the low of that bullish engulfing bar, every single bit of price action has been inside that bar right there. So I'm expecting a major breakout here at some stage. Where's it going? Well, my instinct tells me that we're going to break out to the high side and at least fill what is a pretty clear to me box range, which is kind of in here. You could extend it a little bit if you wanted to, maybe down to there somewhere. But this is what I'm seeing. So price has been locked in there for the longest time. And when it does break out, it's going to break out with some momentum. At the moment, it looks like a false break of the bottom of that range, and that's why I'm happy to trade this long, certainly to the middle of the range and up to the top. And of course, I will leave something on the table just because if this does reverse, my goodness gracious me, there's a whole bunch of dollars there waiting for us. So that's been the theory for the last, I don't know, 3-4 months, and I just can't get into the trade. It ain't happening. But today, on the weekly chart, we are trading this bar here. Once again, a slingshot candle pattern. We've had plenty of warning that this is going to take place all through here. And this, the latest bar, which is not a great bar to trade, but that's the one we're trading. We're going to enter above it at 1.1165. Stop loss is going to be 200 pips below that, which is what, 1.0935, if I'm not mistaken. Or is it 55? Let me just correct that. 60, something. 1.096, no, 1.0965 it is. That's the stop loss. I'm going to take the first profits at this level here. So the top of these little train track reversal bars, if you want to call them that. And that is going to be at 1.1245. That will be my first take profit. But like I said, I want to trade this right through to here if I can. I'll certainly be taking something off at the top of the range and then looking for perhaps a break and retest, making a scale in possible. So just entering more trades as we go. This may be Christmas next year when this all, or if this all pans out, but hopefully we can get in there and make some cash. Righto, let's get to the weekly game changer bars if I can find. There we are. So there aren't many, so this won't take long. They begin with Australian dollar versus the Swiss, and not dissimilar to pound versus the Swiss. I do have something that meets the eye here, and that, of course, is the double bottom. I'll go to the monthly chart first, and when I see a game changer bar, I always go to the bigger time frame, the monthly, to tell me exactly what has been going on. And I call this the big boss. Now, the big boss is really very, very clear that we've been in a downtrend for a long time. And we've been cognizant that this level here eventually will act as support. Is this the time? I don't know. But when I see the big boss telling me to go short all the time, that's when I'm looking to trade game changer bars. Now, Mr. Mo and Lexon, you're probably not aware of what game changer bars are, so I'll just briefly explain what they mean. A game changer bar is a bar or candle, if you like. Let me go a little bit tighter. Who has its high or low, depending on whether it's a buying bar or selling bar. In this case, it is a buying bar. And if we are looking to buy, then we need to have a candle or a bar whose low is lower than the previous low. So last week's low is lower than the previous week's low, and the candle or bar, if you like, has closed on or near its high. So here's the high, didn't close on it, but it closed very, very near to that high. So that is known as in the technical analysis circles as a key reversal bar. So if you look up key reversal bar, that will tell you exactly what that bar is. And I call it a game changer bar. And the reason I call it a game changer bar is because it reminds me of what I'm trying to achieve. Now, I've just explained that the big boss, as I call it, or the most dominant feature on this chart is a downtrend, without question. So I'm actually not looking for a reversal bar to the upside. I'm looking for a reversal bar to the downside, something like that or that. Probably they're the only couple in this particular part of the trend. So that's what I'm looking for to continue with this gigantic momentum. That said, at some stage, there will be a potential trade, maybe a retracement, maybe a reversal. And that's what I'm always looking for as well. So when I look to trade this as a reversal, I'm looking for a double bottom or bullish engulfing bar or anything like that, that says I can go long or potentially the market's going to turn. And then I look for confirmation of that in the form of a higher low. And that may well be what this candle has presented us. Two things. One, that would prevent me taking this trade. Number one is that the very first resistance level is so close. Actually, I've got that probably in the wrong spot. Let me move that a little bit. That probably belongs there, where it's been support and resistance here again. So the problem is, if I enter here and put my stop loss down here, the reward available to this first support and this first resistance level is very, very poor. I've also got a secondary resistance level, probably a little bit above, maybe not. If you go through that high, you're also trading into that. And if I swung that down to here, which is probably the correct trade line to use, that's exactly what I'm doing. So I'm trading straight into the resistance. So on those two counts, I've got to pass on this one. So the next one, let's move on. When it doesn't work, if the setup's not right, you just move on. It's pretty simple. Aussie versus the Kiwi. Also, you're most welcome. Also, a game changer bar to the upside. Again, the low is lower than the previous week, and it closed near its high, not on its high, but near its high. So it's a reversal bar, in my humble opinion, a game changer. Now, the second part of being a game changer is it has to be, by definition, changing the game. So what is the game? What's the current game? Well, the current game is actually bearish, right? So we're in well, certainly on a 4-hour chart or a 1-hour chart, you'd be in a downtrend here. So when I look for that bar, I will look for that downtrend to change. Okay, it's a retracement on this big move. I don't care what it is, but it's actually the momentum of the market at this point in time. So that bar there is suggesting that that momentum is going to change. Game changer. That's why I call it a game changer. Now, what do we need to do, guys? We need to have the big boss going with us. Now, the big boss here is very, very different to the last one that we looked at. Yes, we've come off a downtrend, but since then, we've been in an absolute range. So this makes this one something that I would probably look at if I'm looking to buy here. And the secondary look at this is going, well, okay, big double bottom sitting here, got a higher high, then I've got a lower, then I've got a higher low, but then I've got a lower high and a lower low but it's still a higher low based on this quadruple, quintuplet, sextuplet bottom, if you like. But it gets a bit tricky because we've had a false break of this resistance area, and you can see that price has been very, very reluctant to go back above that level ever since it came back under it. So reject here, reject here, reject here, reject here, here, and here. It's exhausting. What I do see, however, is the potential for this to break out to the upside eventually based on this market structure. This market structure being an ascending triangle. If we go back to the weekly chart, you can see that probably a little more clearly. Look, it's not perfect, but all these highs through here, those highs that I was suggesting, have found that strong resistance area meet with the hypotenuse of the triangle, if you like, and give me that ascending triangle look. What I much prefer to do is to wait for price to break that level and then turn that into a false break. That's definitely the way I would prefer to trade this. The weekly bar, again, is a game changer bar, and we've got exactly the same problem as we had with Aussie versus the Swissy. We're trading straight into an untested monthly pivot. What we don't have here, however, I feel, is a strong, apart from the monthly pivot, resistance level. That probably doesn't occur until we get up to the top of our triangle. So if I were going to take a game changer bar on the weekly, other than the ones I've discussed before, this would probably be it. Aussie versus the Kiwi. Yet I would still have to take some profit when I got to the monthly pivot and make myself safe in the market. So the reward to risk on part one of the trade would be very, very poor. So I've left that and traded those other two, as I said before. But I do think if I got a signal down here on the daily chart, so maybe a higher low in this vicinity, I'd be very, very willing to take Aussie Kiwi long. And target areas, well, first target areas would therefore be up in this vicinity somewhere. So definitely on my watch list, Aussie versus the Kiwi as a buy, but I want to see a decent pullback before I enter. Where else are we? We've got a couple more. I said I will hasten because Ash has joined us and I am going a little bit over time. Kiwi versus the CAD. Yeah, look, double top has formed here on the daily, but the weekly, sorry, is suggesting that we are sellers this week. Big Boss is in a down, or is it? Yeah, it's a little bit tough, isn't it? Ouch. Rangy pair, I suppose, because they're both commodity currencies, but I don't know about this one. Don't know about this one at all. It's a bit messy for me. It is a game changer bar to the downside on the monthly forming as well. Of course it is. We're only in the first week of it, or nearly the second, I suppose. But again, you've got the monthly pivot. So I'd need to see a little bit more from Kiwi CAD before I wanted to sell it at this point, I think. So that wouldn't be on my radar at all. Kiwi versus the dollar. We've really got to have a look at the dollar index if we're going to talk dollar trades. And, we spoke about this last week, where the weekly chart was telling us to be buyers of the dollar last week, and that's pretty much how that panned out, with the dollar having a reasonably strong week. Turned off a false break of this support trade line as well with the target at the monthly pivot. Didn't reach it, or hasn't reached it as yet. I look at this in big picture mode. I'm still convinced that we're going to the bottom of this range at some stage. So I'd like to see maybe today, tomorrow, or into Wednesday, doesn't really matter, price go to this level and then peel back off it. If it gave me a reversal bar, like a game changer bar off the monthly pivot and this horizontal level, I'd be more than willing to short the dollar, which means, of course, that I'd look at things like the euro long, pound long, Aussie long in particular, maybe the Kiwi as well, all looking to buy them into that. Now, I have to preface this by saying this is one of the biggest weeks of data releases that I have seen in a long, long time. Ash will probably have a look at that shortly, but it's massive, absolutely massive. And hence my eagerness to get into the market before Wednesday and Thursday when it's all going to come crashing down upon us. All this news is going to hit. And I can't wait for that to happen, particularly if I'm trading safe in the market. That would be really nice. So the theory that goes with this one is early buying on the dollar, and then I want to sell it off. So buying things, as I said, like Aussie versus the dollar, like maybe pound versus the dollar as well. I'll be looking at those to become buyers. If we, same sort of thing, right? If we come back to this support level, that's where I'd like to buy Aussie versus the dollar. For instance, I won't go through the whole lot of them. Look, won't go through. I think there's only one or two more weekly game changes, but I'll just give you the ones that are on my watch list. I'll give you the two trades that I've taken on the weekly: dollar CAD short, pound Swiss long, and I've replaced that Euro Aussie as well, haven't I? Or is the other one Kiwi Swiss? I've replaced that one as well. Short. So I've given you those. The only other one that's on my radar that I've not spoken about yet is Euro versus the Swissy. Why? Because we're at a very, very strong support level. We've got a double bottom just been formed on the weekly. It's not a game changer bar, but I'd be very, very keen to buy this if I could get a pullback and a rejection or reversal bar down in this vicinity here. Big range, big box range here to be filled. So there's plenty of reward available in the medium to long term if we can get into this one. Euro versus the Swissy, but I need to see that pullback. Righto, I better stop talking and give someone else a chance. G'day, buddy.
Hi, mate. How are you?
Look, I'm not too dusty for a
You feeling
Monday.
better?
Oh, look, 100%.
Yeah.
Yeah, much better.
That was a big thing to fight, wasn't it?
Bastard of a thing.
Yeah.
It can get knotted and not come
Yeah.
back.
Yeah.
Not very good, but
No.
I've fared a lot better than a lot of other people, I suppose, because I'm still here.
Well, yeah. Well, this is the thing. I mean, it's. I don't know whether it's the same now or not. Did you get it before? Is it like the first time?
Oh, look, I think I did, but
Yeah.
the test was negative. But yeah,
Right.
it
Right.
felt pretty similar to what I've just been through.
Yeah. Yeah. It can be pretty debilitating for a while, but good to see you back on
Certainly
your
is.
feet, mate.
Yeah, cheers, mate.
So market wise, there's as you say, mate, when it comes down to what's going to go on, really the midweeks are massive, and it really starts on Tuesday. I mean, obviously we got the rate decision on Wednesday, but on Tuesday we actually kind of get some economic data which might well kind of influence the market, and that's going to come in the form of this core CPI data, and really, this is probably bigger
Yeah,
than
true.
the rate decision itself, because I think everybody's probably expecting the rates to be left on hold. And the rates probably will be left on hold at least until CPI gets down to 2%. I don't think the likelihood that they push higher from this point are practically zero. So that's one thing that I think will settle things down to a degree. But I think that this is going to be the key figure. CPI kind of pops up a little bit to 3.5%. Expectation then will definitely be that will be on hold. And it's not really about what happens on Thursday. It's more about Wednesday. It's more about what happens next year. When is that interest rate reduction going to come through? Is it the spring? Is it the summer? Or could it be as late as the end of 2024? And I think that's kind of more what investors are reacting to right now. So far, the interest rates haven't seemed to hamper the growth in the economy. We've seen sort of 5.7% GDP in the last quarter. So the US economy is doing very, very well. It's, you know, there doesn't seem to be a huge problem, and even right across the board, you know, even the ECB posted their or the Eurozone posted their GDP numbers the other day, negative 0.1%, not that bad, considering what we've had, you know, this kind of slew of rate hikes. There may be a delayed effect still in play. But I think what's quite interesting is that the jobs market has remained robust. You know, there's still more than one job per applicant that's actually there in the market, which is astonishing, really. And I think that it seemed at the start of this whole thing that if they were going to get hold of inflation with any degree of success, they would have to loosen the labour market. You know, the labour market would have to kind of collapse to a degree, but that just hasn't happened. So we'll see what gives on the CPI data. I think is important. I think the labour market numbers may end up being even more important, but we'll see what happens with the CPI data. Anything under 3% sends the dollar probably significantly lower, particularly if we get a rally of some sort in the dollar. That may well push gold back to the upside. You know, we'll have a look at gold in a minute and the price chart. So that's obviously big. The UK seasonally very weak. The pound coming into this week. GDP numbers are projected at negative 0.1%. I don't know whether that's going to be the case. I mean, you know, the UK has surprised me how resilient it's been. So we'll see whether that number does come in poorly. If it does come in poorly, then obviously we would see the pound come off a little bit. And looking for currencies to kind of trade this against, it's difficult now to go against the yen. Because last week we had an announcement from the BOJ suggesting a pivot in their policy. And of course, a pivot means that they will get closer to everybody else's policy, and that means that the yen is not at fair value, you know, before the announcement. And we've seen a little bit of a rally in some of these currencies against the yen. So the yen now, I think, comes in front and center when we're looking at potential currencies to trade: the pound, the dollar, the CAD. All of these three against. So looking at the UK, what happens there? Core PPI, of course, that's going to be of some importance. The interest rate is the big thing, and it's quite common for a currency to rally into an interest rate decision and then start to sell off, depending on what this interest rate is going to be. GDP from New Zealand could be interesting because I think the New Zealand dollar is still one that is showing some signs of life. And if the global economy is not the global economy, if risk from investors is heightened because they are believing that there is going to be an interest rate reduction, things like the Kiwi and the Aussie, you suspect that they would both do relatively well out of that. So looking at to see what that is, I think this is quite an interesting one as well, the S&B. You know, because really we've seen some incredible robustness in the Swissy over the course of the last 2 years, or definitely year and a half, and it just hasn't really had a sustained period where it weakened. I mean, that one trade that you and I took just collapsed, and it's actually below the area that you and I entered now on the CAD Swiss a few months ago. So the Swissy is just probably out of all the currencies the toughest, you know, and it's the Teflon currency right now. But what I would say about that is that we've had a significant reduction in CPI on the last print, and that doesn't mean that they are going to lower interest rates by any stretch. If any are going to lower interest rates, it's probably going to be the ECB and the S&B. They're probably going to be the most keen to weaken their currency somewhat, or at least support the economy. But the economic situation in Switzerland's pretty good. The inflation data is coming down, but I think that the press conference could be quite significant with that one. So watching out for the Swissy, only for a short for the Swissy. You know, going long anything but the Swissy, not because of economic data, but because the price point has been so, I suppose, overdone, you know, to the upside for the Swissy, that I would be looking to try and sell that off if possible.
Yeah, there's a few things look particularly nice with a higher low off the base here.
Yeah. Yeah, and it's got a lot of room to run, of course.
Yeah.
Bank of England interest rate decision again is going to be pivotal, and I like the pound for a trade this week. I would be looking at a short, but I'd probably be looking at a short, as I say, against the yen rather than anything else. Even though awful one to hold overnight because the costs are quite high. But so you've got to be pretty clear that you really want that trade, in my opinion. ECB rate decision as well. Going to be about the press conference. I don't see how all of the central banks, how the European Union can be that comfortable with their interest rate numbers the way they are, because economically they really are suffering. PMI is coming out under 50. As I say, we had a GDP number that was negative last time out for the third quarter, and things just don't look good for Europe. So they're on the sell list on the fundamentals, and that really would bring us to the end of the week. Except for we need to keep watching news from China, but just to sort of like see what's going on there. And we do get some PMIs, just to kind of like tail up the week. But as you say, mate, Wednesday, Thursday, big numbers. Tuesday,
Massive.
though, we mustn't discard because of the CPI data. And of course, that's going to kind of lead us into what are we going to do with things like gold? What are we going to do with the stock market? Gold is now down to that 2,000 level that we discussed. It's at a support level. If the 10-year yield on the United States dollar is going to come down, then we are going to see gold rally. I'd say it's as simple as that, and it's in the right point to rally as well from this particular area. So I like gold. I don't like the stock market much, but I do like gold. So
I
gold's
like
the
the
one.
three amigos. That's what I like.
Yeah, you do like those, don't you? I mean, they're still there, aren't they? And gold's still got the gap down the bottom. But for me, get under that level. Okay, sell off, no problem at all. But we've had a break of this high now, and I think that they might just want one more bite at that before they do sell off. But it's going to be about Wednesday, mate. I don't think it's going to be anything else. So we'll just have to see how the week unfolds. Yeah, I think it's going to favour the intraday traders, which is why we always enjoy hearing from George, because he's going to have some pretty good ideas of what indices are worth trading maybe before Tuesday and Wednesday.
And here he is.
As if by magic.
Hello, buddy.
I'm trying to find the speak button. Okay, I found it. And now I'm trying to find the picture button. There you go. How are you gents doing?
Oh, we're doing well, mate. Yeah, we're doing well. Jeff's back on his feet.
Yeah, much better. Thanks, mate.
Yeah, no, just heard, man. I'm glad that you're back on your feet. It's nothing more painful than just being debilitated,
Well, I'd rather be actually sitting on my bum watching something on television now, but I am on my feet, and thank goodness for that, I've got to say.
Excellent. No, brilliant. Well, I want to answer Ash's question from last week first, and somewhere I should be able to see MetaTrader. Yeah. Anyway, I want to let me answer your question from last week about you said, mate, have a look at pound yen and see.
Oh yeah.
Yeah, if you're gonna find a lot more opportunities there. The good news for all traders is that it really doesn't matter which currency pair you look at on a 5-minute chart. Okay, so let's underline that. Because if you just scroll through, take any month, October, just scroll through, you don't get any more opportunities in one than the other. If that makes sense. So you could decide depending on now I'm wearing the filter of my strategies. So let's keep that in mind. So if I look at my strategies, one of the key things I look at, like at the open, I'm looking for a breakout. And I don't trade the breakout per se. I look for the first pullback as long as I have a confirmed breakout. So today, if you look at DAX, we don't have a breakout. The UK 100 problem was this first candle here. Yeah, this been a bear candle followed by bear candles. Then I'll say, okay, this is enough breakout. I'm looking for a pullback. But now, as it is, I'm not looking to do anything until I get more information. because that's a problem. If the bears were strong, would have just sold off from the beginning, and then I would have looked for a way to get into that market. But I'll wait to see how we test it. So, all of that other stuff. No breakout here on UK 100 and trading range on CAD. Now, just looking at that one.
Or is it me?
Have I gone quiet?
You're all right. You're right, Maya, mate.
Okay, all right. So, just looking at that one strategy at the open, looking for breakout and then pullbacks. If you flip through, so the pound yen specifically versus like the CAD or any other currency pair, I've looked at other currency pairs. In a basket of trades out of a basket of days in a month, there is no greater advantage from one to the other. So it comes down just to your preference. Which market do you have a good sense of? I wouldn't trade any yen pairs unless I give myself another month to get into the groove of them, what influences them, the economic data, etc., etc. So I'm, it's probably not what I think traders wanted to hear, but it just comes down to preference and then getting yourself to know the market and then sticking to your strategy, and you'll find as many opportunities off the 5 minutes, and I could think probably also off the 15-minute. Will be different, of course, when you get to daily charts. Weekly charts completely different. Then you got to look at a whole basket of things because things unfold differently and affected by different factors. But on the 5 minutes, it's just preference. So
no pound yen for you.
No pound yen for me. Sorry, Jeff.
I was going to say before you traded any yen pairs that you'd give yourself an uppercut, and I'm a bit the same.
Or the market will give you one.
Yeah,
it's so hard to catch that yen, man. It's really difficult. But there's good reason this week. I agree with that.
So here's the thing. If there's this research thing by psychologists that your brain can hold constantly and fully process 7 plus or minus 2 bits of information, between 5 and 9 bits of information. So, I'm comfortable at 4. I could add a 5th market because the way I trade, I really want to get a sense of the rhythm of the market. So the only reason I wouldn't add it on is I just want to start to get into that zone where I'm becoming a little bit uncomfortable by the number of things I'm looking at. That's the only reason.
Yeah, it makes a lot of sense, actually.
So
yeah, well, for the first 6 years, probably first 6 years that I traded one currency pair only, nothing.
Right. Yeah.
And I absolutely, got a far better understanding of a few things, not just that currency pair and how it acted and moved, but you get to study price action per se, rather than flicking from one to the other, where you're looking for different setups or whatever the case may be. You're not actually looking at what the charts in front of you is doing. You're looking for something that may or may not be there, if that makes any sense to anybody.
Yes, definitely.
You're actually viewing, by looking at one chart, exactly how price does react at different levels, at different candle patterns, at different areas of the chart, different times of the day, all those sorts of things that come into it. And I think that's extremely important when you first begin. Get to know one particular asset class, whatever you're doing. I think you can do yourself a huge favor by sticking to just that one thing. Not forever, but for a good period of time.
Yeah, agreed.
Yeah, and then you overlay that with what you love doing in the market. I just love the whole challenge of looking for opportunities and executing them. And I can just do that, prolonged periods of time.
You mean
so
putting money in the bank, George? That's what you enjoy more than anything, right?
Yes, yeah. So the goal is to take as much money as possible from the market, and you gotta find a way to do that you absolutely enjoy. And if it means go up higher time frames and look at more things, then do that and do that very well. If it means drill down to lower time frames and you go to your basket of strategies and you apply that, then do that and just do whatever gets you more money out of the market consistently. So having said a bit of my psychology, as we've opened, there's nothing as yet that is set up for me, but just on the daily, I mean, S&P 500, it's been interesting enough, I've been made some good returns before the US markets opened, which is quite interesting on this market, because when the US market opens, of course, dynamics and volumes and things change. I'm very excited that we've finally come out of this tight trading range, that we get in pretty decent big bars, which gives opportunities. Only problem, of course, you don't know when the big bar occurs. It could just be, when you said, okay, that's it for the day, I'm not going to stay up for much longer, and then you have dramatic move. But the fact that we have large candles just takes us out of this tight trading range mode, which makes swing trading a little bit easier. I still think, we've come back. I think we spoke about this a long time, saying we're going to come back and test the EMA, etc. But this is just my own 10 EMA. I mean, I don't know how many guys look at that. I use that for that strength of the trend. There's still 20 EMA, there's 50 EMAs, there's all sorts of other key EMAs down here. So I still think those markets want to test that at some point. It doesn't mean that we're going to become bearish. So even if we get a lot of bear candles, we're just going to be testing the low of this trading range, which is good. We get down here, if we get a reversal, we go up here. Even if we spend the next 2 weeks of December, I'm closing off on the 22nd, going up and down, you'll have good opportunities there. So I think trading range on the daily, opportunities to sell off at the top, buy at the bottom. Then, of course, I'm going to be looking for those things if they set up down on the 5 minute. UK 100, big sell-off. I mean, I've said to guys that, like I've just said now about the S&P 500, it doesn't really matter when you come into the market. Opportunities can just be there at any time. I mean, if you look at this, we've retraced more than half of the bull trend day on Friday. And a big part of that, or almost half of that, occurred before the market opened. So if you've been trading through the Asian session, you might have had an opportunity to sell off. I don't know what time that would be. Let's have a look at it. Afternoon, midday or something. That would be a good opportunity. So it really doesn't matter as long as you know how to get into the market for opportunities. So again, here we have a last candle of November bull spike. And I think potentially we might, not potential, we are in a channel. There is a spike, and that's a channel. So, bull trends, either you start off with a channel and then you break out, or you get a spike and then you get a channel, whatever variation. So we are in the channel part of a bull trend, which would mean to me that the bears have an opportunity to test the low of the channel, okay, which is also testing the EMA. So there could be a little bit more selling today to try and break the low of Friday, get to the low of the channel, and then third touch of it, we could rally up again and just stay within the channel. I don't know how long into December. If the bears are strong, like we had here, bull spike, attempt to do a channel, and the bears just came and collapsed it with a big bear candle. So if we get that happening, fantastic. Then tomorrow I'll just get up and start to look for more opportunities to sell. But so far we are
tricky little upper trend line, George. If you look sort of like the high of the September 22, and then extrapolating down to the next high, that sort of trend line coming down is the tricky one that I think the FTSE needs to get through. Obviously, sort of coming down there. It needs to get through there really if it's gonna have a sustained rally. But the fact that it's still there, and it hasn't quite seen that, and it hasn't seen the break of the previous kind of horizontal level of support back in was it October. I think there's probably just a little, I think there's going to be people interested in the FTSE in buying it up. I would have thought until at least we see that level.
Yeah, I mean, if you just have a look at after that big sell-off, if you look at what we've had here, I mean, price has gone up, but the most distinct things are the big, bull candles.
Yeah, yeah.
And then it dodges because the bears are trying to fight it off. So, I mean, yeah, you're quite right. Even if we come down and test the bottom of the channel, there's still an opportunity. I mean, that's an interesting, what do you call that? Confluence factors. Yeah.
Yeah.
So in that particular point, if the bulls are strong, they're going to have to push above that. If they bounce off, I don't have that on my lines, but in that zone, if you look at it, if they bounce off that, they're still just going to come back into the channel line and hopefully try and keep breaking up.
Yeah.
So on the day, I want to just wait and see. I mean, if the bulls are strong, double bottom, accelerate up. The bears are going to come back. They're going to have to do a little bit more double tops and whatever stuff in there. So, when you come into the open, that's why I kind of log in around 20 past or 25 past. I'm very keen to see what's happening at the open because you might just get bear candle, 3 bear candles, decent enough pullback, boom, get in there and market accelerates down. But as it is now, when I get this kind of bull bear candle, I realized there's a lot more work to be done by both sides. So I'm happy to. I mean, when I saw that opening of the DAX, I thought, oh, good for the bulls. All they need with that kind of candle is another decent bull candle. Then we say, okay, we have a breakout above the first candle. Give us a third bull candle. Then happiness, we look for a pullback and we buy. But it failed completely. Okay, trading range price action, let's wait and get a little bit more information. Now, while I'm watching, of course, the price action to unfold, the stuff that you were talking about, the fundamentals behind the scenes are driving all of it. But then connecting that to what I said earlier on, because I have this basket of strategies, I just want to see it unfolding in front of me. Then I watch out for the key news announcements, decide to stay in the market if I'm in with a stop or get out. It's always better to get out, wait for it to play out within the first 3 candles and then jump in. So probably a bit of waiting so far, just looking at everything on other screens. And I don't know if we'll get anything set enough. So in terms of probabilities, I kind of look for something to set up in the first 15, 30, 45 minutes. I'm really attentive. And then when it's kind of trading range like it's doing, and now I start to wonder, by the time we get to the 18th candle, after that first hour and a half to 2, and really like the opening buzz is going, will we have created the high of the day or the low of the day? Then we can start to look for something else. So that's kind of the thinking. So now I'm gonna grab a cup of coffee and wait.
Yeah, I think it is a bit of a waiting game, and probably why it might be all day as well today. It might be just be one of those days which doesn't really kind of have much liquidity because of it's a big week, isn't it? It's almost like a boxer resting before the fight.
Yeah, is it Wednesday? Is it when you have the US news?
Well, Tuesday we see CPI data, which is obviously huge, and it's going to set up. Yeah, that's tomorrow. Yeah. So that's going to set up Wednesday, and Wednesday's the FOMC decision. And then we also get this week the SNB decision, we get the ECB decision, and the Bank of England rate decision. So there's lots to digest, and it's one of those that it could be a great week or it could be a hideous week, and it really does. It's going to test everybody's patience, and I think that word is probably going to be the most prevalent. How patient can you be, and how patient can you be if you do lose the first trade to wait for the next right setup? That's probably going to kind of carve out how successful anybody's going to be this week.
Yeah, and again down onto the 5 minute. The good thing about it, if you can patiently wait for something to happen. So for argument's sake, let's say it's going to take us a couple of hours to get back here and test and give a double top. You know, I get up, stretch, lift a 5 kg, 5 kg,
Yeah.
5 kg, do some stuff, but keep so that you don't get caught up and be down towards your, your drawdown targets. Because you got to know that even if nothing sets up that's crystal clear, when you get a news announcement taking place, in the time frame that you are, I mean, like the US news is going to be late for me. I'll probably watch it, watching TV or something, but it's late at night. But CPI is fantastic. It's an hour before the US market opens, and you might get, one of the post-news strategies that I have can be crystal clear, so you don't have to struggle with it. You can wait and then execute after the news, 30, 45 minutes after the news. So when there's news like this, I love it, because the challenge, like you said, is to hold back and just be patient. Even if today goes and I've set the whole day and not executed, but I'm staying in step with what's happening. And then when things start to unfold and the announcements are coming in, you might get to pick up a few percentage points just in one day. Then you wait again. So it's a one of the little pet theories I'm working with, and it's quite interesting because, as you know, I spend a lot of time in charts, and I've been saying to myself in the past couple of months or so, began to realize that it's not, once you know your chart pattern, so let's underline that. The next big thing is not knowing more and more chart patterns, or it's getting to know yourself more. By looking at losing trades. And I said, but George, I mean, this was a gift. And what happened? Why did we fumble it? Or why did we, we used to have a joke way back in school when I used to play rugby. This one big guy was just humongous, but he wasn't the smartest of guys. He was intelligent, but we used to laugh at him and would say, listen, whenever the ref asks a question, you do not answer, because the ref is going to say to you, we used to call him Chief, penalty. Do you want to try there or do you want to kick there? You're going to say, I want to kick there, instead of just taking the penalty, So I look at it and I say, but why would you do that? Because then I realize now I've got to deal with myself. I've got to learn to sit. And that becomes the game. And the more you do that, the more you restrain yourself. You take less losing trades, which means you make more money, right? Because you got less losing trades. And then when you take the good ones and learn to hold them through, you make a little bit more money.
Well, I think that's really good advice, mate. Do you know what I find fascinating as well? You say about sort of learning your chart patterns, but even a chart pattern has nuance. And I suppose it's even that, isn't it? You think you know a chart pattern, but actually that chart pattern has nuance as well. And I get, you could go on forever. That's why I think what you were saying about picking, 4 or 5 charts is really, really quite insightful, because you could go deeper down into a hammer, one bar. The hammer can be 30% smaller than the previous hammer. It could be, at the low end of the range. It might be on a 4-hour chart. It might be, on a different time frame. It might be a red hammer. It might be a green hammer. There's so many nuances that you kind of that you can analyze even further on. That this game can take forever, really.
Yeah, and the goal is to extract wealth, right? I mean, and if you've got to say, okay, this is what I've got, and if it's not there, it's not there. There's no point continuing to refine it further and further, because you continue to refine further and further, and become a super chartist. But we want to be very good chartists, but very good at making money.
Yeah.
So I'm quite petty these days about the goal, George, is to make money.
Yeah.
There's a very, very subtle, but subtle as a sledgehammer, difference between a good analyst, a good chartist, and a good trader. Very different things. Two very different things.
Good point.
Yeah.
Absolutely. George, are you able to come in a little bit early next week? And here's the reason why.
What's the reason?
My brother is visiting me for pre-Christmas, and I've got to pick him up from the airport, and he'll want to have a celebratory eggnog or something, I would imagine, and I will be unable to be in next week. So if you guys can, and it's the last show of the year, which is something that I don't really want to miss, but family before trading at all times, and if you could be in just a little bit earlier, that'd be great. And you guys can probably wrap it up fairly quickly, I would have thought.
No, that's perfectly fine. I mean, I'll log on as soon as we start, and
Awesome.
see any trade, whatever, I'll just call it. So I'll just do what I usually do before I log in. Let Ash do the talking, but if I see anything, I'll set up. But I'll be there on time. Yeah, sure.
He's no good at talking, Ash.
Not a problem.
talk the leg off an iron pot. Okay, guys, if you've got any questions, we are here to answer them for you. Or if you've got any ideas or what you're looking at to trade this week, please feel free to put that in the chat, or you can come on to the mic if you want, or you can just show us your charts. Who cares? Whatever you see fit. If you've got nothing, then I think we might call it a day. I think we've given you a ton of information during this last hour or so. I've got way too many trade ideas, I think, for the week, but they will be very much determined by this amazing amount of data releases and speeches and statements that are coming out this week. So my counsel would be get in the market, yep, but get safe before all of those announcements are made, because they could be very, very violent. I'm looking for a volatile week, which is not a bad thing. And we'll see how that pans out. Questions there are nil. So let us go. So I will say my farewell to you guys for the year, because this will be my last appearance in Trading Buddies for 2023. George, I know you're coming into a very important season for yourself. I hope all that goes well for you, and thank you very much for 2023. Can't wait for 2024 and share a coldie in Bali. That will be a marvelous occasion for me, because I haven't been there for a couple of years. Ash, mate, can't say too much how much I enjoyed Trading Buddies and being your trading buddy, and thank you very much for that for 2023, and I look forward, as always, of catching up, particularly in Bali, where we'll have a fine old time, I'm sure.
Back at you.
Both of you have a wonderful festive season, and those of you who have seen fit to join us in the room for however long during 2023, thank you for being our trading buddies. I look forward to you being back with us in 2024, when that will happen on the 8th of January. That's it from me.
That's it from us.
Anybody else?
Thank you. Bye-bye.
Have a wonderful week ahead, and we will catch up when we catch up. See you guys. Bye-bye.